Is Trump going to fire Jerome Powell, and what is that going to do to interest rates in the U.S. housing market in 2025? I'm going to answer that question in this video, but first I'm going to show you all some big price cuts I am now finding on the U.S. housing market. And the big thing I'm seeing here south of Atlanta is a lot of houses with two handles on them. And what I mean by two handles is less than $300,000. You know, I'm seeing houses between 220 grand, 280 grand on the market. In some cases, folks, I'm seeing 4-bed, 3-bath, 2,400 square foot homes listed for 260 grand. And this is a huge change. This was not happening a year ago. This was not happening 2 years ago, but it's happening now. And a big reason why we're starting to see these cheaper prices in the market now in July of 2025 is because of the investors. The investors are selling and they're trying to get out of the market in some cases. But I want to first start by talking about a listing that I just went to about 10 minutes ago. This listing, everyone, is owned by Blackstone. And Blackstone, a subordinate entity of Blackstone, bought this property for $510,000 in 2022. Do you know what they have it now listed on the market for, everyone? $405,000. So literally, the Blackstone entity has cut the price $105,000 below what they bought it for. Now, this is a 6-bed, 4-bath house, 4,200 square feet, currently now listed for $97 a foot. Unbelievable, folks. They've cut the price over 100 grand. And I walked around the neighborhood. It was a nice neighborhood. And in that neighborhood, you can buy what's essentially a mansion for $97 a square foot that was built in the mid-2000s that looks in livable condition. There's another house not too far from here, everyone, that I also found. It's a 4-bed, 3-bath, 2,400 square feet, on the market for $265,000 or $112 a foot. I also visited this house. It was in a nice neighborhood. And again, it's an investor selling. It's one of the biggest investors in the US. However, the question is, are we going to continue to see this downward momentum in prices, or is Trump going to fire Jerome Powell? And are we going to get a new Fed chair who cuts interest rates? And is that going to reignite the market? Is that going to reignite home price growth? Because this has now been in the news a lot the last couple of weeks, especially this week. The rumor is Trump is considering firing Powell, though he says it's unlikely. We don't really know. However, we do know that Trump wants Powell to cut interest rates significantly. And so let's run through that, everyone, because I think you guys need to understand the potential outcomes of this scenario. What if we have a new Fed chair who cuts rates down to 2%, from 4.5% down to 2%? What would that do to the housing market? Well, the first answer that comes to mind is, oh, well, it would cause home buyer demand to go up. There'd be a flurry of buyers in the market, is what I think a lot of people think, is that if the Fed were to just cut interest rates aggressively, there'd be a lot of buyers. Because if you were to cut interest rates, say from 4.5 to 2%, that would theoretically lower the mortgage rate by maybe a similar amount, and that would make borrowing costs cheaper, potentially bring mortgage rates back down to, say, 4.5 or 4%. Maybe that would cause buyers to come back in. And I think maybe that's the outcome that Trump and his team probably wants, right? By lowering interest rates, they want to rejuvenate demand in the housing market, because home buyer demand's literally at the lowest level that it's been at in 30 years. Pending home sales are at close to a 30-year low. Mortgage applications are at close to a 30-year low. Existing home sales are down 25% from normal. Even builder sales are now sluggish again. And this low home buyer demand environment is causing issues for the economy, right? It means fewer people are moving, fewer people are buying furniture, fewer people are going to Home Depot. There's less of a demand for commodities. So I think the Trump administration wants to reinvigorate the housing market. They want to also pay less interest on the debt. But the implicit assumption there is that the Fed cutting interest rates will lower borrowing costs for consumers. And I'm not so sure that's the case, everyone. Because if the Fed were to just cut rates from 4.5 to 2%, it's very possible that long-term bond yields don't go down as much as people would think. It's very possible maybe that the bond market would not like that action by the Federal Reserve, and that long-term interest rates might actually even go up in such a scenario. In fact, even today, earlier when there was the report that Trump might fire Powell, long-term bond yields spiked. They actually went up. The interest rates went up on the long end of the curve with the potential news that Powell was going to be fired, suggesting that bond market participants don't like the idea of just firing the Fed chair and putting someone in there who's going to cut interest rates closer to zero. You can actually tell, folks, this is a pretty nice home builder community I'm walking around in right now. Has some nice trees, actually has some green. Folks, often you don't see trees and green very often in home builder communities, but in this one, they do have some trees. They do have some landscaping, which actually makes a huge difference. But we need to keep talking about these investors for a second, everyone, because I actually think you guys out there as home buyers and potentially new investors, you might be able to make some money off the exodus from the current investors from the market. Because I just keep seeing huge price cuts from a lot of these Wall Street institutional investors. I first saw it in Florida. I was reporting it to you guys over the last year in Florida. I'm now seeing it in Georgia. And in my next stops in Tennessee and North Carolina, I think I'm probably gonna see it up there too, if I'm guessing, because all of these markets are getting rocked by inventory. The inventory of homes for sale is skyrocketing. And actually in the South in America right now, the 16-state South, which you can see here on this map, there's over 580,000 homes for sale, according to data from Realtor.com. That's the highest level of inventory on record for the month of June, going back almost 10 years. So there is a real correction occurring here in the South. And we actually just updated the data on Reventure app from Zillow on home values for June. And you can see home values are now negative year over year across much of the Sun Belt and the Mountain West. So this is no longer a theoretical discussion. This is no longer a theoretical exercise of the potential housing market downturn or correction. It is happening now in real time, and it is great news for you guys out there. I want you all to understand that, because sometimes I get feedback, in the comment section to my YouTube videos and Instagram posts, and people say, "Hey, Nick, why are you so negative on the housing market all the time?" Other people say, "Why are you so negative on Florida?" And I'm not negative on the housing market. I'm not negative on Florida. In fact, the things I'm telling you about and showing you with the data and on the ground, this is all great news. It means prices are already getting cheaper and will continue to get cheaper into the future. And a lot of people in real estate have this apprehension where they think they could just never talk about the market going down. And that talking about the market going down is bad, and that if you talk about the market going down, that means that no one's ever gonna buy homes ever, and that no one has a desire to own real estate if the market goes down. And it's actually the opposite. It is the exact opposite. It's the market going down that's going to unlock a whole new segment of home buyers. And this is something the builders have figured out. The home builders have figured this out. They've been very aggressive in cutting prices and reducing mortgage rates. And this isn't rocket science. This is just math. This is just, economics 101. And so many people in the real estate industry just don't understand it. Particularly a lot of realtors don't understand it. A lot of investors don't understand it. They think that if you talk about the market in quote unquote negative terms, like prices are dropping or that prices are overvalued, that you're dissuading people from buying. No. In this market in 2025, it's the exact opposite. People get excited to buy when they hear about values dropping. It draws intrigue, and ultimately, it makes things affordable. And that's the biggest reason why we're in a housing recession right now, everyone. It just got too expensive. It just got too expensive during the pandemic. Prices went up 40, 50% at a national level. The incomes and wages didn't go up by that much. And so I know when a lot of you out there, you look at buying a house on Zillow or Realtor.com, you look at buying a house on these listing sites, and you say, wait a minute, why is this house 500 grand when it sold for 300 grand 4 years ago? And you just say to yourself, I don't want to buy it. And you guys can let me know if that's kind of what your thinking is. If that's the reason you're on the sidelines, is because prices are too high, or if maybe there's some other reason you're waiting to buy. Maybe for you, mortgage rates is the big hurdle, but I've polled some of you in the past, and you don't seem to think mortgage rates is that big a deal. You think prices are a much bigger deal, which again brings me back to this situation with Trump and Powell and the Fed, right? I think while the Trump administration has done a lot of good things in the housing market actually since they took over, they're cracking down on mortgage fraud. They're allowing renter history to be included in credit score reports for applying for a mortgage. Those are good things. They're allowing the foreclosure backlog and FHA mortgages to finally pass through at the end of the year. Those are all good things. However, I think they are too focused on interest and mortgage rates. And I think there's this somewhat of a myopic idea that if the interest rates go down, everything will get better in the housing market. And that is just not the case. What actually is going to bring buyers back is lower prices. Lower prices is going to bring buyers back. That's when it's going to get people excited. That's what's going to get people back in the market. And so from a governmental standpoint, the number one thing our government and the Trump administration should be focusing on is how to make home prices more affordable. That's ultimately going to bring buyers back and re-stimulate the economy much more than trying to play around with the Fed share and trying to play around with short-term interest rates. Because I'm telling you, I have a YouTube channel with over 600,000 home buyers and investors that watch my channel. I read the comments, I poll my audience on why they're not buying. It has to do with prices, not mortgage rates. But let's talk about prices for a second. Just how overvalued are they? Just how much do they need to come down to bring buyers back in? Well, that totally depends on the market you're in. If we look at this overvaluation map from ReVenture app, you can see that we have some states in the US that aren't really overvalued. Like there's some states in the Midwest, North Dakota, South Dakota, Iowa. We have some states in the Northeast that really aren't that overvalued, maybe 5%, 10%. Prices there aren't ever really going to drop that much because like local home buyers can afford it still to some degree. However, the areas where we really got to pay attention to are the areas in red. These are the states with the most overvaluation. We're talking Montana, Idaho. We're talking Utah, Colorado, Arizona, Tennessee, Georgia, where I'm standing right now. Florida, still 17% overvalued. These markets have more downside coming because the price is disconnected so much from the local fundamentals. And so one thing you can do as a home buyer to better understand, like, is it the right time to buy? And maybe what type of discount should I be looking for when I go to buy? Is look at that overvaluation rate and look at the overvaluation rate for your zip code on ReVenture app. That data is going to really help you understand where the market is sitting today compared to the long-term norms. Now, in this zip code where I am right now, which is near Locust Springs, Georgia, in Henry County, prices are 38% overvalued. They really went up a lot during the pandemic. The incomes didn't keep up. So there's definitely some more downside in this market. And if you are buying in an overvalued market, it would make sense to try to be aggressive in terms of offering below asking price and trying to get a house on a better deal. Conversely, if you see that values are fairly valued or undervalued, which there's not a ton of in the South, but there's some areas near downtown Atlanta which are now fairly or undervalued, prices there probably aren't going to drop as much over the long term. They've already gotten to a level that's more fairly supported by local incomes. So that overvaluation metric is like a key tool in your tool belt as a home buyer and investor to understand the risk factors in the market and potentially anticipate the areas where values could decline the most over the next, say, 5 years. And in 1 second, I'm going to tell you how you can actually access that data for your zip code. But first, I want to actually talk about how much I like this area I'm in right now. I'm actually staying here in Locust Springs for a couple days, and there's a couple things I like about it that I just want to talk to you guys about in terms of like quality of life, as well as obviously the affordability of homes. And the first thing I noticed here, about 30 miles south of Atlanta is where I am right now, is that the people are so nice. Oh my gosh. I mean, just within a day being here, some of the nicest people you'll meet here south of Atlanta and Georgia, and through much of the South, right, is like this. But particularly here in Georgia, south of Atlanta, the people are really, really nice. I just keep meeting people who are really, really friendly. In terms of the local economy here, it's more of a manufacturing hub. There's some manufacturing and distribution facilities. You have kind of more mid-level jobs. The median income here is around $88,000, which is above the US norm. So the US median income is like 83, 84. Income here is 88,000, while the prices are cheaper. So there's more affordability, and that affordability is, I think, really why I like this area. I mean, if you could buy a 4-bed, 3-bath house, 2,400 square feet for $265,000 in a neighborhood that feels decent, that's a huge win in today's housing market where the affordability is near the worst level in 30 years on a national basis. And so areas that have more affordability, that are in growing states with good weather, nice people, and some local economic drivers, I think those are markets where if you buy in those markets today, you're going to do better. It's not to say that prices won't drop by more in the future. We're actually forecasting values here to drop 5% over the next year, and they are 38% overvalued, so there is downside. But this is one of the first markets I've been in where I say to myself, okay, it could make sense to buy soon if these prices keep getting more affordable, if more of these investors keep selling. And one thing I want to be clear about, guys, is I'm not changing my perspective on the housing market. A lot of you probably aren't used to me being a little more bullish on an area I go to. But now that prices are dropping by a lot on certain listings and dropping in a lot of different cities, I do think it makes sense to start thinking about what your offer strategy is, thinking about how much you'd be willing to offer on a house, and not just stay passive on the sidelines, but get aggressive. And if you do offer 20, 30, 40% below asking price, sometimes you might not get your offer accepted, but you'll be giving useful information to the listing agent and to the seller about what the home is worth. And who knows, you might actually get your offer accepted, because that's the other thing I'm seeing consistently, especially across Florida, seeing more and more listings where you see it listed maybe for 500 grand, ends up being sold for 430,000. The seller never advertised that they were willing to sell it for 430,000, but someone came in with an offer and they got the house at a much cheaper price. So do not be bashful, and you can use Reventure app to help you find the areas where you're more likely to get a deal and a discount. You could use that overvaluation rate as well as our 12-month price forecast. Our premium plan is $39 a month, or you can get a 15% discount on that if you sign up for our annual plan. That annual plan will help you track this data month by month over the next year, so you can make a more informed decision, make a better offer, save money on your home purchase by using the Reventure app premium plan.